Hey guys, Lance Martin, Coldwell Banker Town and Country and the Martin Group. We are back for our February 2025 Real Estate Market Snapshot. Today is February 15th. We're back on schedule. I'm technically a little bit late for my February snapshot, but we stacked up January and then December, and we kind of got a little bit off course, but we are now back on course. And man, what a very, very interesting, let's just say 45 days or the last 60 days have been as it relates to the market. A tremendous amount of very predictable stuff, but then there's a couple of things that have me saying, maybe the February 2025 snapshot will be one that I will look back or you will look back and say, maybe there's been a change in the marketplace. Maybe there's been a shift because there's some very interesting stuff going on and I think something is changing. So let's jump in and see what we got. As always, same QR code. You can find it on the link, whatever it happens to be, whether it's YouTube or Facebook or wherever you're seeing this, same stuff forever. I am doing an event. I'm teaming up with Sean Teague. Sean is with Movement Mortgage. She's asked me to come and do like a little mini snapshot out in the low desert. This is a private event, so I'm kind of inviting you, but I'm not inviting you. So if you're interested in this and you're doing any business down in the low desert from basically the Coachella Valley, connect with me. I'll connect you with Sean. It's very limited seating on this, but if there's room for you, Sean will say, yeah, you can come on in. If not, maybe we'll do another one. We're doing these apparently or he's going to be doing these apparently every month or so for the rest of the year. And this is at the Porsche dealership down in Palm Springs. So anyway, I'd like to support Sean, and if you're in that marketplace and you know Sean, hit him up or hit me up and I'll connect you with him. So let's jump into our Southern California market update. And again, like I said in the intro, a lot of very predictable stuff, a lot of things that you fully would expect, therefore they're predictable, but then a couple of things that really have me kind of saying, okay, this is interesting. So where are we with median price? I've switched up the way we do this in the presentation. If you want to see the data, you can click here. You can very slowly see tick up. So by the way, on balance, median price, the month of again, this is the February snapshot. So we're looking at January 31st month-end closing numbers. Median price basically up across the board ever so slightly. What we're looking at on a year-over-year perspective is 8% up at 1.4 million in Orange County. January, 8% from January of last year, 7.8% in LA, 5.8% in Riverside, and 12% in San Bernardino. So I don't like the 12% number in San Bernardino. I just love the 5.8 in Riverside. That's very stable. That's very manageable. We like that. But bottom line is January to January, 25 to 24, median price up across all four counties that we're tracking, anywhere from 5 to 12%. Again, I like the low, mid single digits as opposed to the high single digits, but we'll take it. So anyway, 1.4 million in Orange, just under $1 million in LA County, 634 in Riverside, and 560 in San Bernardino. So price is stable, price is up. So there you go. Supply and demand. This is the part that I've been talking about that is so predictable. Now again, this is the 15-year chart. You can click into it, and I know it's a little difficult to see, but if you come over here and you take a look at the far right side, you see a dramatic spike upwards in new listings taken. This is exactly what it's supposed to do, or we're supposed to basically trough in December and we're supposed to jump up in January. That's exactly what it just did. And if you look at our little EKG here, for the most part, that is exactly what's been happening on this chart for 15 years. Sometimes it happens in February and not in January, but new listings up. Thank God. Okay, so we've got some new listings up. Now, what does it mean, though? Again, this is January 2025 compared to January of 2024. 14% more listings in Orange County, 16% more in LA, 13% more in Riverside, 13% more in San Bernardino. It's exactly what we would expect. And the fact that those numbers are in the mid-teens is good. If they had been up even 20 or 30%, that wouldn't have shocked me because, again, last year's numbers weren't great. We've been complaining about inventory for a long time. So this is nice. We hit January, we see more new, by the way, these are listings that came on the market in January. We're not talking about the ones that we carried over from November and December of last year. These are brand new listings. So as we would expect, new listing inventory up. The numbers are good, but it's still low, and I'm going to emphasize this. We're up 14, 15, 13%, but it's still a lower number compared to what I think we need to have. We still have that inventory problem. But again, new listings last month up, wonderful, very predictable. Now this is all listings. They take everything that came on the market in January, plus everything that was left over from before that didn't sell. Again, it's a 15-year chart. It's not quite as dramatic here, but let's take a look at what those numbers look like for all new listings. Again, Orange County, 13% more than we had January of last year, 14.5, 20.6 in Riverside, and 20.2% more listings this January 2025 from a year ago. I like that. We've been griping forever. We do not have enough homes. We do not have enough homes. Well, we're starting to build a little bit of inventory. And again, I think building it in January is awesome. So we'll see, maybe we can actually have enough homes for everybody to choose from as we move forward. So this is the new listing inventory, or all listing inventory. Now here's the pain point, all right? So here we go. For the last, God, it seems like for as long as I can remember, last month, maybe a year or so, we've been griping about pending sales. Remember on the listing chart we looked at a minute ago? We went from a December, low to a big spike up in January with listings. Well, we have basically the exact opposite on the pending sales side. So we did not do anything exciting at all as it relates to buyers and sellers actually coming together in January. The buyers are still sitting out, shall we say. So again, continue with record low pending sales. So here we are. This is where we ended up with pending sales in January 2025 compared to January 2024. And unlike what we were just talking about with listing inventory up, all listing inventory up, we didn't see that with pendings. Matter of fact, it's pretty dramatic. 15% fewer sales in Orange County, 25% fewer sales in LA, 15% fewer sales in Riverside, and 26% fewer sales in San Bernardino County, January to January. These are big numbers. And if you're in my business and you sit back and say, and by the way, last January wasn't great. So this is why, again, this is the part of my little video where I'm like, feel my pain. These are dramatic drop off in pending sales for the month of January. So we shall see. The chart should reflect that we're going to start to see some increases in these numbers. So think about it. For those of you that follow this, we have a lot more, not a lot, but we have certainly more properties for sale, but we're not seeing more buyers and sellers coming together in opening escrow, which is our pending sales chart. So this is pretty dramatic from a standpoint of reduction of buyers and sellers coming together. And this, again, this is just that pain point for me, just that pain point as somebody owns and operates a real estate company where I'm going broke. I'm in real time. It's like, my God, I got to sell a few houses. And you saw those percentages of numbers that we just don't have those buyers and sellers coming together. So this is the part that's a little bit interesting. So let's take a look at the days on market. And I mentioned earlier in the video that maybe something's happening here. Maybe we've got a little bit of a shift. And I think this data that I'm looking at doesn't completely surprise me, but I think we're seeing a shift in our marketplace. If we haven't already seen it, it just seems a little bit more apparent. So here's our days on market. Now, 33% higher, more days on market in Orange, 14, 16, and 25% in San Bernardino. So last month or two, I started putting the days on market chart into this presentation, and I pretty much said, hey, yeah, the days on market numbers are up 30%, 25%, whatever it happens to be. But don't worry about it because the days on market are still significantly low. So what is this? 24 days on market in Orange, 24 in LA, 36 and 34, Riverside, San Bernardino, respectively. Those are still relatively low days on market. So again, let's just define this if you don't follow this stuff every day. I list my house and 24 days later, I'm in escrow. Okay, that's not a very long time. So having said that, it's all up across the board. I'm anticipating it's probably going to continue to go up. So we got to kind of keep that in mind if you're an agent in this marketplace or a seller. The month supply, they kind of go hand in hand. The month supply of homes along with the days on market. And again, they're all up. January to January, month supply is up 10%, 11%, 22%, and 26% in San Bernardino County. But again, is that a big deal? Last month I said no because the days on market are still so low. So 2 months, 3 months, 3.8 months, and 3.8 months. So generally not a big deal, but I got to tell you, I do think there's a dynamic here that I think we all need to factor in, okay? If you are a real estate agent in this business today, or for that matter, a seller who is in this market today, you're not used to this. You're not used to having a 3-month standing supply of inventory or a 35-day on market. And what are we used to? We're used to like a 2-week standing supply and a 2-day days on market. And I list my house on a Friday. I'm on the market for 2 weeks, but I'm not on the market for 2 weeks because I list my property on a Friday. I get 32 offers or 5 offers or 2 offers over the weekend. And then the seller and the agent seem to take 10 or 12 days to figure out which one of these offers they want to accept. So it might show that it was on the market for 2 or 3 weeks, but in reality, it was on the market for like 0 days because instantaneously you had all this buyer demand. Well, we don't have that right now. So I think there's a psychology amongst the agents and the sellers that when they see these properties on the market for 2 weeks, 3 weeks, 4 weeks, a month, 2 months, that I think there's going to be some anxiety there for the agents and for the sellers. What does that mean? I think we might see some price reductions in that regard. Now, having said that, we just saw price appreciation anywhere from whatever it was, 5 to 12% year over year. Maybe that'll slow down a little bit. Maybe we'll start to see some opportunities. And it's all, of course, interest rate driven. So up until probably 4 or 5 months ago, I was paying no attention to month supply and days on market. I would mention it so casually just because it was in effect, it was 0 month supply and 0 days on market. Well, that's the change. That is truly the shift. And we've been seeing this for a little while. And the reason I mentioned the sellers and the agents that might see this as a concern as we move into the second month of 2025 is this is something that I've been talking about with my agents now for a year. I would have my agents reach out to me and say, oh my God, what am I going to do? My listing hasn't sold. I'm not getting any activity. And you could feel the anxiety and the stress, and that was probably getting pushed on them from their seller. And I'm like, well, how long have you been on the market? Well, I've been on the market for 10 days. I'm like, you've been on the market for 10 days? Give me a break. Well, yeah, Blinds, but I don't have any offers. I'm like, So again, we're going to see what this does. We are in I would say a month's supply. I haven't said it today, that a 6 month supply, 6 months supply is considered normal by the National Association of Realtors, okay? Or if you just Googled it and said, what's a normal supply of inventory in the United States housing market, you probably would see a lot of stuff that said, 5 or 6 months is a normal supply. This is the deal. We haven't had that for 15 years. We have not. So how can that be normal? I've even said that. Oh, it's normal. Well, if it hasn't been that way for 10 or 12 or 15 years, that doesn't sound like that's normal anymore. So we are definitely in a shift. Be very interesting to see which way it goes. Our spotlight city this month is Ontario. Again, I did last month, I think I did Palm Springs. The numbers are irrelevant. You guys can take a peek at this. But again, the charts, I just randomly pick. I was sitting down with my grandson and my granddaughter last night, and I said, what city do you want to do? And I don't even know what they said. I think they said Ohio. I said, yeah, let's do the city of Ohio. That was Abraham's suggestion. So anyway, so we settled on Ontario, but prices. So 15 years where we probably see a little bit of a pullback in Ontario last month, whatever. Nothing to concern yourself with, but look at that. I mean, you can't be unhappy if you own a property in Ontario the last 15 years. Values have done nothing but gone up. Active listings. This is why I say we need more inventory everywhere. A little itty bitty tick up in the city of Ontario. That's great. But again, compare this to where we've been. Just compare these inventory levels to where we've been. It's improved, but basically very, very little homes for sale. And then the pendings. I was kind of on my soapbox a minute ago talking about pending sales. We've got our EKG in Ontario. Look at the drop-off in pending sales in the city of Ontario in the month of January. I mean, it's with the exception of 2008, when we were, this is right at that point in time when the world was ending, right? And a couple of low spots. I mean, it's all-time low. All-time low. Buyers and sellers coming together in the city of Ontario. Like I've said, every single month since we've been doing the spotlight cities, they're almost all the same. Doesn't matter. Same chart, different city, whatever it happens to be. So again, pendings, or let me go back a page. So the active listings, they're up, but they're still low. All right. The pending sales are down, and they're down about as low as they've ever been. So anyway, we'll see what that means. If you're interested in your particular city, let me know. So where are we with interest rates? We've been talking about interest rates so much. Quite honestly, if you blinked and you weren't paying attention what happened on Valentine's Day was very good for the bond market and for interest rates. Where as of yesterday, today's February 15th, as of Valentine's Day, February 14th yesterday, bond market closed, 10-year was about 4.5. That basically took the aggregate of all mortgage rates out there for just below 7. Okay, that's nice. Just below 7, I'll take it. Psychologically, it's a little bit better. So there we are. So we had a good 24 hours in the bond market. 3-4 days ago, if we had done the same thing, it was significantly higher than that. So at any rate, so there we are with rates, but all of this ties into what I've been talking about. We've got this psychology of interest rates. Where are we? Where have we been? What the expectations are? Things are too expensive. I can't afford that. I don't like the price, but I also don't like the interest rate. Therefore, I'm a buyer. What am I doing? I'm sitting out. I'm waiting. Okay, this is from Wells Fargo. Wells Fargo came out with their forecast. This caught my eye. It caught my eye because this feels correct to me, all right? And I've gone through a variety of feelings of where I thought interest rates were going to be, and I thought we were going to be better than we are right now based upon the Mortgage Bankers Association, the California Association of Realtors, all of these folks out there that track this stuff. You guys have heard me say, oh, we're going to be in the low 6s, we're going to be in the high 5s by the end of 2024. Well, obviously, none of that happened. Wells Fargo came out with this a couple of days ago. I know this chart's unreadable, but if you want to find it, just go search the Wells Fargo U.S. Economic Forecast. There's a lot of data on here. Bottom line is this. They're projecting that we're going to basically stay somewhere in 7-ish for the next 2 quarters, which will put us basically into June. And then from June on, around 6.5% for the next 18 months after that. So the balance of the second half of 2025 and all of 2026, they have landed on a 6.5% 30-year fixed mortgage rate. This is kind of the higher for longer thing that we've been talking about on the economic side. I have no idea whether they're correct or not. I saw that and I said, you know what? I think that feels right. I don't think anybody now is sitting out and saying we're going to be in low 6s or high 5 interest rates at any time soon. This feels right to me. And quite honestly, as an owner operator of a brokerage, as much as I'd love to see them a little lower, if we can have an 18-month or a 24-month window where we just have basically stable interest rates that are within a quarter point of 6.5, 6.75, I think that'll be a good and healthy thing for the marketplace. Buyers will settle in. They might not be happy. They might prefer that, sub 6 or sub 5% mortgage rate. But this feels correct to me. So it'll be very interesting to see how this pans out over the next 18 to 24 months. So there we are with interest rates. I left this chart up over here, and I've been talking about that we're kind of in this frozen zone. This is my attempting to, put some sort of graphic up that says maybe we're going to thaw out a little bit. The next several months are going to tell that. Not so much our interest rate's going to come down, but does the market kind of thaw out? When I say frozen over here, I'm not talking about interest rates frozen. I'm talking about buyers frozen. So do the buyers sit back and say, okay, it's the season, holidays are over, I'm into February, I'm into March, I'm into April. Do buyers do what they normally do? Do they get out and engage and buy real estate? Well, we'll see if that thaws out a little bit, and I do think if we can keep the rates below 7, God forbid we get anywhere close to 6.5. All of these, I'm going to not hit the right spot, but if you take a look at these little spike downs in interest rates, almost every single one of them correspond to buyers re-engaging in the marketplace. So just that little bit of a dip below 7% that we saw yesterday, that very well may spawn buyers say, hey, I'm below 7%. Let's get back into the marketplace and take a look. So we shall see. So where are we? I haven't really changed my forecast a whole lot. This is what I put up last time. Inventory up, volume up, mortgage rates, no idea. But again, that's pretty funny. I just realized I didn't change this chart. No idea, but a sustained 6.5% or lower will increase all of the above. I did not read that before I pulled that slide up. Well, guess what? Wells Fargo apparently saw my market forecast and said, you know what, we agree with Lance. If 6.5% mortgage rate is where we are. So we'll see. So I said up here, I didn't change my forecast. Well, maybe I will be changing it, because if Wells Fargo is correct and my analysis is correct, if we can get a rate right around 6.5, I think we'll start to unfreeze this marketplace a little bit. That 5%, that 5.5% mortgage rate, I've given up on that. That's that magic rate, whatever it is, I've given up on that. So anyway, so there's my forecast, relatively unchanged. Thank you for watching this month's snapshot. I hope you're having a great kickoff to the year, and we will see you next month.